Hello everybody, welcome to the January 13th through 14th, Monday and Tuesday 2025 price review. Now, getting started, we are looking at Monday's price action on the 15-minute time frame. And as you can see, it was pretty lackluster, which we had anticipated. So the morning session in Monday, as you can see, pretty back and forth, very choppy. Now, London session did offer a pretty good move, but there was no real good way of getting into that. So we were very choppy in the morning session, but we expanded higher and made a nice run in the afternoon session. Now, the reason why we expanded higher and made a nice run in the afternoon session is because we formed a daily SMT between Q2 and Q3 on the daily cycle with the Dow. So as you can see right here, the NASDAQ on the left made a failure swing while the Dow ran the low. And now I get asked this frequently of which candles are a part of different quarters, like is the first candle a part of a quarter, etc., etc. This candle right here would be a part of the quarter. Even if it's the first, it's still part of the quarter because this is the 6 a.m. candle. No matter what time frame you're on, no matter what it is. This is still the 6 a.m. candle. So if you're looking at the daily cycle, 6 a.m. is the very start of Q3. So this candle right here, since it's within 6 a.m., this would be a part of Q3 of the daily cycle. So we would still see this as SMT. Now we are looking at the 6-hour time frame. So take a moment, look at the chart, and then write down what you see. If you said this 6-hour TPD right here, then you would be correct. Now, what have I told you about 6-hour TPDs whenever it is the 6 a.m. candle? It creates a very nice run in the afternoon session and makes the afternoon session a lot easier and a lot cleaner to trade. So why did Q4 of the daily cycle not run below these lows before expanding higher? Because we already had that SMT between Q2 and Q3. So each one of these candles, these are quarters. So this is the 12 a.m. candle, this is Q2. This candle right here, the 6 a.m. candle, is Q3. And then the 12 p.m. candle is Q4, and it's all part of the daily cycle. So this is basic TPD right here. Whenever candle 1, candle 2 have an SMT, as they do right here, we expect candle 3 to expand without running under these lows one more time. And that's exactly what we got. So that is why the afternoon session was a lot easier and a lot cleaner. Now, generally, whenever you do see a 6-hour TPD form, your hourly fair value gaps are going to be, well, really hourly PD arrays in general, but hourly fair value gaps are really nice to trade off of within that TPD. But really any hourly time frame PD array is nice to get an entry on. So if you would have traded this, which I know some of you saw it, which is very good, but if you would have traded this, then this hourly fair value gap would have been the sweet spot, get in right there. And then what are you trying to target? That current new week opening gap. Whenever you don't have an important SMT form for the weekly range yet, typically price will just revolve around the new week opening gap until something of substance tips its hand. So now we're looking at the daily chart on NASDAQ, and as you can see, we have this fair value gap right here that we were anticipating on Sunday. So we anticipated Monday to be pretty much lackluster like it was, and then we wanted to see a fair value gap form, and then Tuesday we wanted to see price trade into that fair value gap and then get a reaction off of it. So now we are back on the 15-minute time frame looking at NASDAQ and the S&P. We have our true week open marked out. I don't know why it's cropped out a little bit, but you guys know it's there. And then the true day open as well. So again, same thing on the S&P. We have our true week open and we have our true day open. So this gray box, this is the daily fair value gap. As you can see in London session, we trade up into there, we trade into the midpoint, and then run down. And then on the news release, we create an SMT. So NASDAQ creates a failure swing, and the S&P runs the high, giving a reaction for the morning session, offering a pretty nice run. Now, it was a little bit difficult to get in here on the lower time frame if you didn't enter here or you didn't enter here. Now, as a higher time frame level, you can enter at the midpoint of gaps for higher time frame gaps whenever you see an SMT form upon news. So we tagged the midpoint of that daily fair value gap, which is our higher time frame level, tagged it one more time right there, and then traded lower, above the true day open and above the true week open. And it's important to keep in mind the time that this SMT formed. It formed right whenever the news released. And now we're looking at the 15-minute time frame again. NASDAQ on the left, S&P on the right. We formed a non-sequential SMT right here, which is low probability, which is why we retraced back within the range in the PM session. So today was pretty low probability. So if you found it pretty frustrating, or you were like, why is it so difficult to find something to do? This is why. Because before CPI, price typically tends to have this characteristic, or really before any big news event, price will tend to have this characteristic, and then after that news event releases, price becomes a whole lot clearer. So now I'm going to give my prediction on what I believe is going to happen. So currently, I do not want to pick a side. So CPI will run either the sell side liquidity or the buy side liquidity. If you do have a position opened up right here, please roll your stop into profits, not even at break even, into profits, because slippage, if CPI does expand higher, then it will run right through that stop and then give you a potential loss even though it was at break even. So to account for slippage during these high impact news events, please make sure you roll your stop even deeper in profits. So we have buy side liquidity and sell side liquidity on the S&P. And on the Dow is kind of decoupled right now, which is another characteristic that tends to happen before a big news event. So I don't really hold an opinion for one side of the marketplace. Remember, we do have those lows that we outlined on Sunday. So gun to my head, I would like to see price draw down to there, but as of right now, it could go either way. It's very 50-50. So we're either going to take out this high or take out this low upon the news release. So with that being said, hope you found this one insightful. I will speak with you all tomorrow. Good luck and good trading.